Hi there, Serial Trader here. I'm going to have a look at the major US indices and just checking in from where we left off the last time, starting on SPX here. So I had this idea that maybe we were doing a fourth wave, you know, a 1, 2, 3, 4 with 5 to come. Well, we've now gone to a point where we can no longer consider this pullback from the, the March highs there a fourth wave. Because no matter how you label wave 1, whether we put the top of wave 1 here, or here, or certainly here, any way you interpret that wave 1, we've now definitively overlapped with that, okay? So that would invalidate this being a 1, 2, 3, 4 pattern. But let's dive into this a little more. And we'll also look at the NASDAQ and the DOW as well as far as the wave count goes and do some cross comparison with the S&P. So what am I still looking at here? Well, I'm still seeing, you know, the low over there from February 24th on SPX. I'm seeing an impulse wave and then a corrective wave. And then I'm seeing another impulse wave. And so far, what still looks to me, despite it going lower than can be acceptable for a wave 4, what still looks to me like another corrective wave. So how do you reconcile that? Well, let's clean this up a bit. Okay. And what I'm thinking here is, okay, this can still be a 1, 2, and maybe a 1 ABC expand flat wave 2. This can still be an impulse wave, but not a wave 3. So perhaps we're doing another 1, 2, and we're subdividing the 3 to come. So let's drop the degree down here on this. So if you're following 1, 2, and now a 1, 2. Now actually we'll probably go a little lower here early next week. Just let me get this sorted out. And then we'll be looking at 3, 4, 5 of 3. And we still need 4 and 5 and so on. So don't get too preoccupied with where I have these labels. They're just kind of placeholders for now, not actual time or price estimates or anything. But you get where I'm going with this. So this is certainly still acceptable. I would have preferred to see just a clean 1, 2, 3, 4. Now, if we go in on like the 2-hour chart, if we examine this decline we've had since the March high there, I think this so far would work best as this. So we got ABC down, so we'll call that wave W. ABC down for a W. This is an X wave. And now we're probably doing ABC down for the Y wave. And of course, drop the degree on that. One more. So it looks like we need just a little bit more downside to finish. So we got down, up, down, up, down, up, down. So what'll be a 1, 2, 3, 4, 5, 6. We need one more, at least slight new low, depending on how much follow through we get here. But it could just be a minor new low, like basically tag the old low and reverse, or follow through a bit and then reverse after. But we need this seven wave sequence for the double zigzag here. I guess I could even go as far as labeling the sub degree here. There we go. So ABC down for W, and then some sort of an ABC up for the X, right? And then potentially working the ABC down for the W. Now let's just do some scenarios here so we can do the relationship between this proposed W off of the X, and we could look for the equality level for wave Y. So that would bring us down to 43.33, and then we can also do a smaller relationship, so between this A and this B, and for that C of the Y, so A versus C equality of the proposed Y, that gets us to a similar area, 43.20. Okay, so somewhere in the, we'll call it low 4300s. Looks like a reasonable area to potentially find some support here. Given our weekly close today, I think it's pretty likely we do at least coming down and at least briefly flush these lows that we did earlier this week. Now another thing, if we go back to the daily chart, we'll also have the fib retracement of this. So we got the 1, 2. So we have the fib retracement of this 1 for this proposed 2 of the 3. Let's do the, I think we're around the 50. We'll put up the 618, etc. Give us some levels to work with. So you can see right around the W versus Y and A versus C relationships within this proposed correction. That also lines up reasonably well with the 618 retracement of this overall impulse wave, and also the golden zone, that 65% retracement area. So again, call it low to mid 4300s as a proposed zone. So far we're sitting right around that 50% retracement, but again, looks like we want to come down a little lower. So maybe I'll just take away that 50% level. And then of course, kind of the retracement of last resort is way down here, 4260 at the 786. Ideally we don't go that deep, although it could certainly happen. So that's kind of what I'm looking at here. Early next week, come down and make new lows, then ideally get a big reversal, and then potentially be in this wave 3 of 3 scenario to the upside. Okay. I mean, the only thing that'll really shake me off staying, overall with a bullish tilt here is if we come down and take out the February lows on the S&P. And, it could happen, but right now I'm just really doubting that that's the case. For instance, if I go in on the 2-hour, for that to happen, you would have to have a completely different mindset here. And just let me explain. You basically, just clean this right up. You basically have to be saying to yourself, okay, from the March high, we got a 1, 2. I'll put these down here. Let's just even kick up that degree there. And then you would have to say, well, that overlaps here, so we can't just go 1, 2, 3, 4, 5 for an initial impulse or something. So 1, 2. Then you'd have to say, all right, we have another 1, 2. Again, I'll put these down here. Drop that degree by 1. And then you'd also have to say, okay, we have another 1, 2. So 3 degrees of 1s and 2s. I mean, this is like the mega bear count, right? You're basically thinking to yourself, we got a 1, 2, 1, 2, 1, 2. We have wave 3 of 3 of 3 dead ahead to the downside. This thing's just going to collapse. We're going to go down hundreds of points in a short period of time and take out the lows and then some. Don't worry about all this, cluster down here. I'm not going to place them all in accordance with where they would go, but you get the idea. There'd be lots of subdivisions to the downside before we could count anything as complete. Now, typically when you start doing a 1, 2, 1, 2, 1, 2, whether it's to the downside or the upside, you're probably onto the wrong wave count, other than, in the most rare of circumstances. And when you have this kind of overlapping price action, more of a channel kind of price action that we got going on here. Probably draw the channel something like this. When we're kind of just in this channel, I don't think we're in an impulsive wave to the downside. We're just contained within a trading range, trading channel. But if you want to be the super bear and you're projecting significant new lows, that's the count you have to go with. I just can't get there myself. Has to really do some proving to sway me to that mindset, and just highly doubt that that's going to happen. Now let me just back up here, get back to where we were. Hang on. Okay, that's probably fine. Now back to the daily chart. So given that I've kind of explained myself there and why I really don't think the mega bearish wave count is in order, it's not just because of what I'm seeing on the S&P itself. Of course, I look at other things. So I think I've explained myself well enough on the S&P that, my current best take is a 1, 2, 1, 2. Let's go over to the NASDAQ. So the NASDAQ's a little different. It finished or I would propose that it finished its correction at a different point. So that was the February 24th low on the NASDAQ. It did get slightly taken out on March 14th, but only on the NASDAQ index, okay? So on the NASDAQ, I think we're working something like this. So we have the initial impulse wave off the proposed low there on the March 14th. We are currently doing a significant retracement of that initial move up. Right now we're sitting around that 618 retracement of around 13,878 on the NASDAQ 100. Now it looks, again, just like the S&P, it looks like we need to go a little bit lower. So if I go on the 2-hour chart on the NASDAQ, I think we're working basically the same thing. We're probably doing ABC down for the W. This is the X, and they're probably doing ABC down for the Y. And maybe we're going to go down. Hang on there. Maybe we're going to go down and visit maybe around the 786 retracement or so on the NASDAQ 100. And again, I could throw in the ABC subdivisions for the WXY there, but I'm not going to. You get the idea. Now let's do some relationships here as well. So we got the length of W off of X. So equality, I guess, down to 13,674. And then we have ABC of the Y. So A versus C of the proposed Y. Let's do that relationship, equality. So that gets us right around that 786 retracement. So let's call it around 13,500 to somewhere in the 13,600s as a potential area to look for a reaction and a completion of this proposed wave 2 from the initial wave 1 off the March lows here. So that's where the NASDAQ sits. So a little different. So just to recap, the S&P, we're potentially working a 1-2-1-2 off the bottom. On the NASDAQ, we're just working a simple 1-2 off its bottom with the idea that wave 3 to the upside is coming. And then on the Dow, you can still currently hang on to the idea that we got 1, 2, 3, 4 with 5 to come, just a simple impulse wave still in development off of the Dow's February 24th low. And you can see if I count the wave 2 as an expanded flat, which I actually think is a pretty good way to label it, if I do that, and that has the wave 1 ending here as opposed to here. If we do that, then we actually have not had 4-1 overlap. Hang on, let me snap it right on the high there. We have not had 4-1 overlap on the Dow. Very close. So the wave 1 high under this labeling interpretation is 34,095.74, and the wave 4 low here is currently 34,102. So a very close shave, but not a technical wave 4-1 overlap. So if that low holds on the Dow, which again, the Dow even on the short term looks a little different. Like if I go on the 15-minute chart, looks like the Dow's done a little impulse wave, and this just looks like a correction of that impulse wave, like a 1 ABC down for the 2. It looks different than the S&P and the NASDAQ, even on the shorter time frame. So if this does hold and kind of looks based on the shorter term time frame here on the Dow that it is likely to hold, then we can just do a simple impulse wave up for wave 5, and maybe maybe wave 5 is going to be extended or something. But what I'm getting at is the Dow has its own wave count, even though directionally everything is kind of suggesting that some upside is coming. They're all in a slightly different position individually as indexes. So again, to recap, the NASDAQ 1 working the proposed 2 off of its low. The S&P 1-2-1-2 looking for wave 3 of 3 off of its low. And the Dow just currently still able to work at 1, 2, 3, 4 with maybe 5 to come. So a little bit different on the subdivisions and the overall wave count, but directionally everything still looks like it wants to go get some upside here. And again, I will only be shaking off that notion if we actually take out all the lows here of all the indices, which again, not currently expecting, but If it happens, then of course we have to reassess. But that's what I'm currently working. Okay, I think that's a pretty good explanation of where I'm sitting here as far as how I view all the indices. If we go over to Thinkorswim, so we had a bullish engulfing candlestick on let's see, today's Thursday. So yeah, we have a shortened week. There's no trading tomorrow. So we had a bullish engulfing candlestick on Wednesday, yesterday, and now a bearish engulfing candlestick today on Thursday. So I'll talk about giving off mixed messages. So given that, and we close near the low of the day, certainly expecting a little bit of early weakness next week, and then ideally a reversal and some upside. We are in the oversold condition here on the daily oscillator. I'll show you the last two times we kind of got into that condition on the oscillator was here on February 24th, and also here in the January lows. So both of these oversold oscillator conditions marked pretty good bottoms. I'm kind of thinking this one will be the same once it makes the bottom and has its reversal. Certainly the oscillator is in that same condition it was before. If we look at the weekly chart on the S&P, so we did close back below the 50-week simple moving average, but other than that, not really much of a candlestick signal to remark on there. I mean, I suppose you could say, okay, we had this little bearish engulfing candlestick last week, and we did get follow through to the downside this week, so I'll just mention that. Okay, so that's the S&P. Now on the Dow Jones Industrial Average, so didn't quite get into the oversold condition on the Dow, because again, it's just been relatively stronger. But we basically got to almost oversold. Now it looks like we're trying to cross back above that condition. And actually, the Dow looks a little different even on the daily candlestick. So we had the bullish engulfing candlestick yesterday on the Dow. Now today, went higher, but then closed lower. But we still haven't invalidated that bullish engulfing signal on the Dow, even though we have on the S&P and the NASDAQ. And what else to mention here on the Dow weekly? Probably the weekly candle looks a little stronger. Hang on. Okay, Dow weekly candle just looks kind of like another doji star week. We've had about 3 of those now in a row. So indecision. That to me just kind of screams a corrective pullback more than a big collapse that's underway. Okay, so that's the Dow. NASDAQ composite. So we are in the oversold condition again on the NASDAQ oscillator, and again that coincided quite nicely with these prior bottoms on the NASDAQ. And bullish engulfing candlestick on the NASDAQ yesterday, bearish engulfing today, just like the S&P. And we're sitting right around that 618 retracement area, but again, expecting maybe a move down closer to that 786 retracement area. And weekly on the NASDAQ composite, kind of similar to the S&P. So we did have a weekly bearish engulfing candlestick last week and some follow through from that this week. Okay. And anything unique about the NASDAQ 100 compared to the composite? No, it looks like the same candlestick situation basically. And how about on the weekly? Yeah, very much the same. So nothing to add to there as far as the NASDAQ 100 goes compared to the composite. Okay, so on the VIX. VIX hasn't really done much. A little bit of a pop up today on the VIX, but we're still even way below this local high we had here, which was around 25.38. VIX almost got to the overbought condition on its oscillator, maybe starting to curl down from that area. We did get a little reaction off the 200-day simple moving average on the VIX for whatever that's worth. Not sure how much stock I put into that, but just pointing it out. Now on the VIX VVIX tool, what do we got going on here? Okay, a little bit of a divergence. So we can see VVIX made a lower high here, but VIX made a slightly higher high. Even though SPX made a lower low. So that's kind of a bullish divergence. SPX made a lower low, but the volatility indices didn't really confirm with higher highs. Or certainly between one another, between VVIX and VIX. And now I suspect if we do make another lower low on SPX early next week, judging by how far away we are from the higher high scenario on either VIX or VVIX, we'll likely have a divergence there as well, with like a lower low on SPX, but a lower high on VVIX and VIX ideally, and that would set up that bottom and kind of a buy signal. But certainly no signs of a buy signal just yet. But that would be what you would be looking for to make the case for one. Okay. Well, that's everything I wanted to go through as far as the indices go. Yeah, so bottom line, a little bit of a wave count change here, at least on the S&P. But the Dow hanging in there by a thread for the 1, 2, 3, 4, 5 scenario. And still bullish, still positioned bullish myself. Haven't really made any changes there. And ideally we bottom early next week and start a decent run towards the end of April and into May, but we'll see. Again, the only thing that's really going to shake me off trying to stay bullish here is taking out the February lows or the March lows on the NASDAQ simultaneously, which I'm just not currently favoring to be the case. But we'll see what happens next week and after that as well. All right, Serial Trader signing off.